In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analyst's predictions are, create a valuation, and review then rate the company. Today we are going to look at Palantir Technologies. Ticker, PLTR. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics be at least 10%. The first pillar is earnings per share, EPS, growth. This is where we take the net income and divide it by the shares outstanding. For Palantir, EPS growth over the past 12 months is 119%, scoring 1 point. Next, let's look at free cash flow, FCF, growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. Palantir's FCF growth is 34%, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Their revenue growth is 14%, scoring 1 point. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. For the last 12 months, Palantir's book value growth is 23%, scoring 1 point. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For Palantir, return on invested capital is 10%, and return on equity is 10%, scoring 1 point for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow, ideally within 3 years. It would take Palantir less than 1 year to pay off the debt, scoring 1 point. With the information we have gathered, it tells us that aspects of the key pillars are strong, but others could raise red flags. So, let's find out more. Help support the channel by tapping the like icon if you have found the information helpful, and click on the notification bell to get alerts about my next videos. Now we will focus on other key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 81%, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on $1 of sales after production costs but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. Palantir's operating profit margin is 14%, scoring 1 point. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. Palantir's free cash flow yield is 0.51%, below the target, scoring 0 points. Next, we assess the 10-year book value growth as potential shareholders. For Palantir, this is an impressive 30%, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. The 5-year net income growth, which evaluates the company's profitability over time, is -2%, signaling a concern and scores 0 points. In the comments section, I've included a link to the investors page and the annual report if you want to check it out for yourself. Palantir has demonstrated steady growth and resilience over the last 5 years. The stock's recent average closing price is about $79, with consistent trading volume averaging 150 million shares. Over the past few years, Palantir has benefited from revenue growth and a strong focus on expanding its product portfolio, catering to government agencies and large corporations. However, its high valuation and competitive pressures in the AI-driven analytics space remain factors to watch. Looking at the overview, we can see the current market cap is $181.99 billion. They are currently generating $2.65 billion in revenue for the trailing 12 months and have 2.28 billion shares outstanding. At present, their earnings per share tells us that for each share of stock, the company is generating 20 cents. Their PE ratio is 381.88, which is significantly higher than the S&P 500 average of about 28. The overall consensus among analysts is a hold, with a price target of $39.92. In addition, analysts are forecasting between 21% and 24% growth. This scores a check. Let's calculate a valuation. I will use Palantir's current earnings per share of 20 cents. Combining historical growth rates and future analyst predictions, I estimate an EPS growth of 25%. Assigning a forward PE ratio of 100, projecting 10 years forward, and applying a desired return rate of 10%, this results in a future stock price of about $186. Using the sticker price methodology, the current intrinsic value is about $72, which gives me a buy price of $54, and this includes a 25% margin of safety. Since the current price of $79.89 is above the buy price, this scores a cross. For full disclosure, I own this stock and would buy more if it went below $66. It all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, Palantir scored 9 out of 12, earning a check. Over the last 5 years, their stock price has shown upward momentum, scoring another check. Analysts are predicting growth of 21% to 24%, scoring a check. The current price is above the buy price, signaling a cross. According to Morningstar, Palantir has a narrow moat, which score another check. My final overall rating is 4 out of 5 stars. I've placed this stock in category A on my stock watch list, noting it has good growth potential but comes with valuation slightly higher than the price I would like to pay. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.